Well, we're slightly ahead of time, but I think that gives us a bit of a broader opportunity for what I hope will be a very interesting session with my colleagues here on our panel. So I might actually start with the 3 Slido questions that you'll see on your screens there. That are relevant in the context of the discussion, and we'll discuss your answers to them, hopefully, throughout the session. The first question is, how do you rate the quality of written audit communications you receive from your auditor, and are there any areas you'd like more information on? Second one is, do you believe the statutory audit should be more forward-looking, as well as focus on the financial statements? And the final one is what do you know about CSRD? And there's a clue there. It's the Corporate Sustainability Reporting Directive, so that'll give you a start. And as I said, we'll come back to those throughout the session. So while you're putting in your answers to those, I will introduce you to the panel members here. So on my far left is Emer McGrath. She's audit partner in KPMG, specialising in life science, technology and aviation. I have Donald Courtney, experienced audit committee chair with PTSB, Dell Bank International, UniCredit Bank Ireland and iPut. Then I have Mary Fulton. Mary, very experienced INET as well, Allianz Global Life, Hanover Re, Bupa Global, James Place International, and a long experience in audit before she moved into her audit committee experience. And Colin Feely. Colin Feely's head of financial services audit with GT. So we've a wealth of experience here. And as was indicated in the answers to what people expect, I think hopefully we're going to get an awful lot from this session, and you will too. Okay, so turning to the first Slido question, perhaps, where we asked about the quality of written auditor communications, and are there any areas you'd like more information on? Well, it's great to see that the biggest word we're seeing there is excellent, and there's a very small confusing word there. Good is now overtaking excellent, so I think maybe people are getting a bit braver. So, you know, there is a lot of information in audit reports, and indeed the session you just heard has Martin set out quite well some of the challenges both for auditors in crafting audit reports, as well as for audit committees and other stakeholders in terms of being able to read them. Way too long, I see there. And again, that's a real challenge. Martin talked about the number of CAMs, for example, and that obviously can lengthen an audit report. But equally, there are more and more statutory disclosures now that are required. And that is auditors explaining what they do. Which is very useful information, but equally one can understand that some readers will feel, well, that's just a lot of stuff that auditors are saying, but doesn't really provide any information. Some would like to see written reports at the close of audit meetings and bullet points. And that goes to communication as well, more broadly between auditors and audit committees, and what I suppose constitutes good communication. And I think that's probably maybe a good point to sort of open this to the panel. So clearly the level of communications will always depend on the size and nature of a reported entity. And putting that to one side, you can have good communications, you can have bad communications, places maybe where it falls short. But before we get into the qualitative elements, perhaps if I could ask Emer just maybe to take us through what auditors are required to communicate, and what you think are the most important messages that you need to convey within those prescribed communications.
Sure, thanks, Kevin. Well, as you mentioned there, and I think Martin has taken us through the long form report, which marries very well with what we have to do under the IAASA, which is communicate things like the scope of our audit strategy, what resources we've allocated to it, and also our materiality. But maybe if I just picked out some of the critical areas, I think the first area, and we've focused on it already in the session earlier, is that piece around our communication of the key audit matters that ultimately find their way into that public opinion, which the audit committee here, the members will be all very familiar. And I suppose from the auditor's perspective, the most important bit is that we give extra colour to the audit committee and help them understand exactly what the nature of the work we did. Really, these areas are the most important, the piece that takes significant audit effort. We need to convey to the audit committee members so they understand exactly what we did on things like estimates and judgments and key assumptions, how we got behind those assumptions and how we audited them, so that the audit committee can be comfortable that we have done sufficient audit work. And I suppose then the second piece I'd turn to is that piece that came up earlier in the session about what can the audit committees themselves do in terms of that communication piece with us as auditors. And I think the really critical piece here is that the audit committee members challenge the auditors on either those key audit matters or on our risk assessment. And oftentimes, like I was in an audit committee recently where we had a really, really good debate about something was a significant risk in the prior year. Why has it been downgraded this year? Audit risk and risk assessment is dynamic. And just because a number might be still materially big in a set of financial statements, it doesn't mean that the risk level is the same, because facts and circumstances like an intangible asset or something, it mightn't be as hard to audit. Things might have moved on. So I think the onus is on the audit committee to challenge us back. And I think that leads to very, very good debate and to a better outcome and a better understanding overall. And maybe, Kevin, the last point I'd touch on, and it kind of comes into a bit that Lisa was talking about earlier, that piece about expectation gap and the need for the auditor to be really, really clear in what's within the scope of our audit and what maybe isn't. An example of this is internal controls. So sometimes you can find that an audit committee might have an expectation that we have tested audit control, internal controls at the client, and we might have or we might not. But I think we just need to make that crystal clear. Currently our audit report under IAASA does not opine on controls. We can choose to take a control approach, but again, I think, and you can see there's debate in the UK, etc., as to whether we might need to do this in the future. But for now, we don't, and I think that's maybe a few of the key areas that we need to focus on.
Okay, I think one of the key points actually that I think you draw out there is auditors know what they're talking about, but there is an onus on them to explain that maybe the nuts and bolts of the audit to the audit committee. And of course, audit committees change. You can get new members on audit committees who might necessarily know what everybody else knows. So that communication element is very important. That's great. Thanks, Emer. Maybe Colin, if I could maybe throw the same question over to you. Do you have any other sort of further points?
I suppose, Emer has touched on some of the critical factors that, form part of our day-to-day roles and jobs. Materiality for me is something that sometimes we need to spend a bit of time upon. Certainly the criteria for assessment and the calculation of that. And oftentimes the number of the quantum of the trivial element of materiality, audit committees need to be comfortable that anything below that number may not come to their attention, and it's something that I think audit committees need to reflect on. Another item would be in relation to the audit findings. Oftentimes, audit findings focus exclusively on numbers, and we can be asked for, our qualitative views in relation to policies, procedures, estimates, and disclosures. Every year when we have, the formal report that we bring to those charged with governance, there may be items from the previous year that were open. We need to highlight if they are still open, have they been closed, how they were closed, and is everybody happy that they were closed on a satisfactory basis. That also adds to kind of bridge one audit cycle to another, and it might form part of that audit expectation gap, which you will bring up at a later stage. And then finally, for me, the independence piece is critical in everything that we do, and oftentimes it can be further on in the formal documentation that we bring to audit committees. But there can be good conversations around independence, particularly where there are non-audit services, or where perhaps something in a network firm was rejected or declined. The audit committee may not be aware of it, and sometimes a general discussion can follow, which I think is useful for everybody in the room.
Okay, thanks. So what we're getting into maybe there is actually as much the qualitative aspects as the numbers that really all the parties need to discuss. So I think that's a key message. All right. Maybe if I could turn then to our audit committee guests, and maybe Donald first, if I could. So we've talked about what's necessary, but in terms of quality communication, what do you consider to be the attributes of quality communication, and I suppose what pitfalls have you encountered with auditor communication? Where has it gone wrong?
Yeah, I mean, if I look at the three boards that I sit on currently, I very much take the view that I look at the process as a team thing, and within that, I look at three teams. You've got the internal finance team, you've got the audit committee team, and then you've effectively got the audit team itself. So for me, communication between those three teams is absolutely key, and the earlier the better in the process. So, I would see those three teams, discussing things like changes in products, changes in markets, new accounting standards, new auditing standards, and basically, looking at those and discussing them and getting those issues out on the table at an early stage right throughout the process. One of the things I think is key for organizations is to focus on the quality of their own internal accounting memos and their own discussions around what positions they're taking on various accounting standards, what the assumptions are, etc., so that they're brought to the audit committee and a fulsome discussion is had around that. And one of the key things for me as well is and it happens in all the boards I sit on, is auditor attendance at audit committee meetings, where they can hear what's being said, they can challenge what's being said, we can challenge them. So all of that goes to me to very good communication. So the final product at the end of the year, for me, really is facilitated by good early communication among those three teams, effectively acting as one team. Effectively, we all have different responsibilities, but we're in the same boat, rowing in the same direction.
Okay, so we're actually talking about three-way communication then, and as early as possible.
Yeah.
And in fact, you're throwing a challenge down really to finance function about the quality of its communication.
Absolutely.
Okay, maybe again, Mary, and thanks again for joining us, Mary. Maybe the same question to you around, quality communication and where you think maybe auditors have challenges from time to time.
Yeah, I mean, maybe just to pick up on some of the points that Donald made around communication and timely communication. I mean, a key part of that are some of the practical things to actually make sure that people have enough time to consider in detail the more complex areas. And I think often there's a great pressure at the year end on reporting and so on. So I think, again, going back to all three parties that are involved, the more that can be done in a practical way to front load consideration of the bigger key judgments, the estimates and so on, and get those out there before the year end. Because COVID happening in mid-March was a bit unusual. That normally normally don't have a big issue like that turning up at that time. But typically, the bigger, more contentious or debatable issues are well known in advance, and they should be got out there early on with papers that set out, the basis that management is using, the statistical support for maybe whatever judgments they're making and so on. And I think if that's done well, it gives the audit committee and the auditors time to fully consider. I think the finance function are important where there's discussion between, clearly auditors will raise any concerns they have or any points with the finance function as they happen. And I think a finance function where the CFO actually communicates, say, with the audit committee chair, in an informal way to say, look, these are the topics that are being discussed, here's where we are with them. I think that brings the audit committee along the journey rather than presenting them maybe with a fait accompli, in the middle of reporting season, and it'd be more difficult to address at that point. And there are practical things to be done, like, for example, it may be obvious, but if there's a big change in accounting standards, get pro forma accounts done before the year end. Everybody can see what the layout changes are, what the disclosures might be, and so on, so that you're not debating those things which could have been done, earlier, at a time when everybody's under pressure and you're trying to get to the critical pieces. So I think it is a three-way job, and it's important that everybody gets involved.
Okay, and let's say we're coming up to, or we're 31 December this year is sort of coming into view. I mean, are you thinking audit committees should be starting those discussions now, or is it still a little bit too early, do you think?
Oh no, absolutely. I would expect for many of the key estimates, there's not that much that's going to change in many businesses between now and the end of the year. So I would have expected that that the audit committees that are happening in, say, October and November those issues are already being flagged. And as Donald said, the way the company prepares, the finance function prepares its papers to articulate those, I think is important. And I can get a lot of that kind of issue out and debated in a timely way, with full consideration, as I say, rather than doing it, after year end.
Okay, great. So I think that's a bit of a heads up for audit committees and finance functions out there to get moving if you haven't got moving already. Colin, if I could just maybe then turn to you and get the sort of the auditor's perspective on that good practice in auditor communications. I suppose what advice you would give to audit committees when they're reading auditor communications, and sort of what areas to focus on.
Yeah, and I think, the main document at the end of the audit tends to be around the audit results report. And oftentimes there'll be sections contained within that in terms of the key risks and the procedures around the CAMs. There may be comments, observations or findings. I think it's worthwhile the audit committee spending time in relation to understanding those, having some dialogue around them, feeling free to ask questions at the final audit committee meeting. I also think, and I've mentioned it already, in relation to the open items coming forward from the previous year, because that can interplay into the current year, and it's important that people satisfy themselves in relation to that being dealt with satisfactorily. The dialogue and the rapport between the chair of the audit committee and the audit partner is important. I think open dialogue, early dialogue, it's good practice, it's good administration. And if there is, as Mary has mentioned, if there's something that needs to be got out into the open early, the earlier it's out, the better, because that puts us all in a better position. Nobody likes surprises in this world. And if we can get ahead of that, that's something worthwhile doing. So for me, and on a personal level, I think that dialogue between the chair of the audit committee, the actual audit committee itself, having the freedom to ask questions in a dynamic environment. People mightn't always know the answers there and then, but at least there's an understanding of where mindsets are headed.
Okay. And I mean, dialogue implies two-way.
Yeah, absolutely.
So obviously, the auditors, if I can say it, maybe sometimes are speaking from a position of strength. Obviously, they know their subject. I mean, do you think, there's good dialogue in audit committees generally in Ireland? Are you getting the sort of feedback you'd like to, or do you think sometimes it might be a challenge for audit committee members to engage?
They differ, and it depends a lot in the present day in how the constitution of an audit committee has come together. Different disciplines, different backgrounds, different experiences. And that open dialogue is something that varies from one committee to the next.
Okay. That's great. Thanks. What a key I'm taking from that is good communication, is early communication, and that definitely allows everything to move a lot more freely when you get to the busy end, as Mary referred to. So that's great. Thanks. We might move then to the second question on our Slido, which related to the statutory audit and whether people felt it should be just backward looking or whether it should be forward looking as well. So yes, I can see is ahead of no there. That being said, I see no, it would be very difficult. I presume the auditors would underscore that. And I think there's a very relevant point there, yes, but there needs to be a clear framework. Absolutely. I think if there's going to be consistency in audit reports, then auditors need to be very clear about what they're reporting on and what's the basis for that reporting. And again, the word challenging appears there as well. And then a comment, I think it is forward-looking, and I think there is absolutely elements of the audit report. If you're, again, the auditors can speak to this, but if there's elements of the audit report that oversees valuation, for example, and going concern, I suppose, is another very good example, whereby you have to be forward-looking to make a report at a point in time. So I think that's all very useful. And I suppose that leads us into the area of the expectation gap, and this, which has many different aspects, but we're going to try and focus on maybe the expectation gap for audit committees and the gaps there is between what auditors do and what audit committees perhaps would like. So again, if I could start with Emer on this one, what do you think are the key messages that would help an understanding of what audit actually does and what steps maybe auditors can take to reduce that expectation gap?
Thanks, Kevin. Well, I'm glad you have ring-fenced the question to the expectation gap between the auditors and the audit committee, and not the wider piece about investor shareholders and the public at large, or we'd be here probably for the whole day. But maybe just to hone in on a few things on that, clearly from the auditor perspective, I think the single most important thing we need to do is clear and concise, plain English language. Just make it simple. It came up earlier about use bullet points, articulate our points clearly and get it across. That's the number one objective. The second piece, and it has been talked about this morning, it's been talked about on the panel, Mary, Donal, about that three-way communication. And I think that's vitally important. So that's the piece about, say, for example, an area of key estimates and judgment and doing it early. What works really well on a committee, on a client of mine, is the finance team actually each quarter organise a pre-audit committee meeting with just the chair now of the audit committee, not the whole audit committee, but they take through their position on those kind of key estimates and judgments, or anything wrinkly or knotty that's going to come up towards the year end. So they do it proactively. We participate, we intend, we have good dialogue, good debate. So the issue is kind of aired before it gets to formal committee. And I think that's just a super helpful idea that maybe people could take away today. Another thing that was mentioned, that piece, and again, it's like this is all common sense stuff, but it is so important. If there's a new accounting pronouncement or something, a new auditing standard that we have to grapple with, just have the debate early. Don't leave it to the last minute. At KPMG, we love to go with the premise that we say it's a no surprises audit. I'm sure that's tripped out everywhere, but it's so true. The earlier you can do it, the better. And I think just one last thing, Kevin, to say in terms of that old bit, I think what audit committees are going to see, they're probably seeing a feature of it now, maybe in some industries like things that rely on actuarial reports or valuations. I think there is going to be an uptake in the number of subject matter experts and specialists that might have to attend an audit committee. And I think the onus is on us as auditors to explain, A, why they're there and why we need expertise. And what we've been touching on earlier, that whole piece about sustainability reporting, I think it's going to become a feature. So again, clear communication and bringing those people into the wider audit committee, because auditing has gotten more complicated in the recent past. So, and we do need help from these specialists.
Yeah, and I think we've heard that a couple of times now. I think the potential benefits of a meeting between the audit committee chair and the audit partner or the audit team before we get into the wider meeting, and I think that's very good. I might just pick up on one point there, because you talked at the start, and I'd agree. I think if you can get clear and concise, if you can get as close to plain English as possible, that would be very good. But at the same time, then we're bringing in subject matter experts. We're getting into technical areas. I mean, do you think the auditor has a role in sort of playing a translation service perhaps between those technical experts and the audit committee, or would you expect the audit committee to know their area because it's their business?
No, and even just one further layer on that, Kevin, is as an auditor, I can't outsource to a subject matter expert. I am signing the opinion, so I have to take responsibility and I have to understand it. And I do think that, and again, I think it's explained, as somebody said, it depends on how the audit committee has been generated. Some people have, industry expertise in that particular area, some mightn't. So it is important that you just, you hone in on what's really important and you explain it well. Yeah, absolutely.
Okay, great. Thank you. So maybe Mary, if we can look at it from the audit committee point of view, I mean, what role do you think the audit committee takes then in responding or addressing that sort of audit expectations gap?
Yeah, I mean, it's an interesting one to say, auditors should make things simple, plain English and so on. And I have some sympathy because it used to be one, but obviously the audit process is underpinned by standards. And those standards are technical and language is precisely defined in those standards. And that's useful because then everybody knows exactly what that means because it's defined. If you depart from that, it does create potential problems. So I think there is that dilemma between using the technically precise language and explaining to an informed public, but it is an informed public, the audit committee, what exactly is being done. So I just think that is a challenge, and often the audit committee chair who may be the person with financial experience, can maybe facilitate that. I mean, one area I think, and Emer referred to it earlier, is materiality. And you do see debates about materiality at audit committees, and audit committees will challenge. I think often what happens is the auditor will come back to say, well, that's our benchmark around revenue, or whatever the factor is. That's our view. And it's hard to dig below that. And to say, well, why is 1% of revenue the number? Give me an understanding of that. Now, it does relate back to the users and how they make decisions around the financial statements, but I think that link could be better explained. And the other area, I think, where the whole area of internal controls is clearly one. I think particularly the work done around IT controls. I think most audit committees probably don't fully grasp what auditors do and don't do around IT controls. And I think that's an area where there could be, I've seen very good explanations of precisely what happens. Do audit committees fully understand what the implications of the work that's done and the work that isn't done is? And I think that's an area for development.
Yeah, I suppose, and again, we've had reference to that already from Emer, I suppose, this area around internal controls and maybe an audit committee getting lulled into a sense of security because they're hearing the auditor talking about internal controls and then perhaps feeling that the work is done. I might just actually ask you a little bit on that materiality question, because it does come up from time to time, and it's going to come up elsewhere in this morning's session. And again, Mary, you would have the advantage of having seen both sides of it. But do you think that's a challenge for auditors to talk a bit about materiality and what it means and how they've got there?
Emer could comment. I think most auditors could talk about materiality for all day if you want to, but I think it's explaining why they've come to that decision, and I think audit committees would find it useful, because typically, in my understanding, most auditors will look at several. Colin could come in here, but you look at several different metrics, and then why do you pick one and how do you combine them? And there is an element of judgment involved, but just how you do it, I think that is a useful discussion.
And I think maybe just to take the area that I kind of have a concentration in will be in the insurance side. So the regulator is looking in and has a focus in relation to solvency. So net assets is something that we hone in on in terms of a percentage of net assets, because if there's a differential there, that's going to cause a blip in solvency. So that's an easier one maybe to explain. But I take the point in terms of, revenue, 1% of revenue. It can sometimes be difficult to explain it.
Yeah. And I suppose in that financial services area, your audit committees would probably tend to come from a group of people who would know the language of central bank regulation and things like that. That's great. Thanks. And maybe Donald, then, if I could turn to you, and again, just on this whole expectations gap area, and where do you think some of the challenges are and what audit committees can do about it?
Yeah, just honing back on your conversation there around internal control environment, I think we probably don't do enough as audit committees in really understanding the enterprise-wide control environment. And what do I mean by that? If you look at the banking or financial services industry, when we look at the various sort of 3 lines of defense model, we have, the first line, which is really the business owning risks and owning controls and testing and reporting. And then you have a second line, which is really responsible for implementation of risk frameworks, etc., but also do testing and reporting. And then you've got the internal audit function as the third line, which again does its risk assessment and does its testing and reporting. But it's something we started to do in some of the boards I'm at the moment, is actually taking all 3 of those and all of the reports and really looking at the heart of where we are in terms of our internal control environment, and trying to understand then how we can, use that information to discuss with external auditors in terms of what's material, what's not material. Have we a bunch of, we talked earlier around last year's audit points being cleared or not cleared, but, also we need to look at the various attitudes within the organization for clearing all the various points that are being raised in terms of self-testing, in terms of internal audit testing and so on. So when you get all of that sort of deep information, it gives you a really good indication of where we are in terms of the internal control environment. That then helps us discussing with our external auditors, but it also helps us in terms of framing our own opinions on things like corporate governance code compliance, or, with the central bank or the UK for listed companies. So I just think that we need to do more around looking around the enterprise-wide control environment and really getting a handle on that and what impacts that has within our organisations.
And you talked there also about having a discussion with the auditors, using the outcome of those reviews. I mean, when do those take place? Do they take place, do you think, before the audit commences? And are they sort of around perhaps shaping how the auditor, assisting the auditor in shaping how the audit will take place in terms of what work they'll do on internal?
Yeah, I think it's really around, so all of the internal audits are all available, all of the RCSA testing is all available, etc. All of that information, if it's discussed at an audit committee in sufficient detail, the auditors will be attending. That will give them indications as to where there might be weaknesses and controls, where maybe they might start focusing their audit work as well. And it's really then in the period, if you've got a March year end, December year end, it's really in that period, September, October, November, pinning down where those key issues are and whether it has an impact on additional work that the auditors may need to do, whether it has an impact on whether we can say that we're compliant with various corporate governance codes. So those discussions really should be on an ongoing basis.
Okay. I might ask you just briefly to comment on one more aspect, Donald, of the expectation gap, and I suppose the area around fraud, and maybe audit committees' expectations, if I can use that word again, of what auditors can do in that area, because it's challenging for everybody.
Yeah, look, it's challenging for everybody, and we're all aware of the various sort of comments that have been made over the years in terms of whether auditors should be made more responsible for fraud detection or whatever. And there's obviously various proposals in the UK, and we'll see what comes out of them. But I do think it's important that, getting back to the control environment comments, that that individual organisations take responsibility for fraud detection themselves, and that they really do have a good internal control environment that allows them to identify fraud. I mean, we know fraud can be internal, it can be external, it can be small, it can be large, but really it's all around trying to identify those frauds, reporting those frauds, because there will be responsibilities potentially within annual reports or indeed to authorities. But it's really trying to get a handle on why they're happening and then take the lessons learned from that and then, bed those in and maybe additional controls as well. So, rather than looking outwardly at auditors, I think it's important that organisations look inwardly and control that themselves as well.
Yeah, and of course, from time to time, fraud can happen at the very top of an organisation, and controls can be circumvented, and that's a particular challenge and a particular difficulty. But thanks for that, Donald. Yeah. Emer, we've heard a couple of comments there around what's happening in the UK and some of the discussion that's happening, maybe coming out of the Bryden review. I mean, one of the interesting discussions or suggestions that came out was around redefining the concept of audit. And whether audit should move away from being purely accounting and into something else. But I suppose maybe taking that and more broadly, what do you see are the fundamental changes for statutory audit over the coming years?
Yeah, and I think I wouldn't necessarily advocate to follow the UK approach blindly here in Ireland. I think where we sit now, I know historically in the past we've been closely aligned with them with accounting standard setting, etc. But probably the EU position is way more important to us and to stay in step with that, particularly from a competitive point of view with Luxembourg, Frankfurt, etc., particularly for our financial services companies. I think there are some interesting parts in the UK debate up that are worth thinking about, and probably the first one, mind you, if you read the paper yesterday, they'd say it's probably not going to be a runner, is the whole concept of SOX, internal controls for UK and obviously an Irish company then if we were to go down that path. And I would say SOX, I live in a SOX environment, so a lot of my clients are in that space. And the relative experience in the US, there hasn't been any kind of shock corporate failures, since it came in. Now there's the whole debate about the absolute time it takes for a company to get it up and running and the level of precision you need in the controls. But there probably is something in it. And it's a bit like Donal was talking about that for an audit committee, from an audit committee's perspective, that interplay between understanding the wider piece, be it the control environment, even the enterprise risk management piece, and then the financial statement audit. So there is something there in that, Kevin, I'd say. That piece about, separation, audit firm separation. And I think the risk with that, and we touched on it earlier, an audit has become a much more technical beast over the last while, and we rely on our specialists, our experts within the firm. And it's much easier when they're in the same firm as you and you can rely on them. You're all singing from the same hymn sheet. I actually think it might have an adverse effect on quality were we to be separated and you're having to go externally to get that specialist resource. So not sure about that one. Just switching then to the wider piece about where I think the future of audit will go, or even what we're seeing now. Data analytics, hugely important. We're becoming, our clients are becoming much more complicated. Systems are becoming better. Mary mentioned about the ability to audit IT controls. All of that is hugely important. So I definitely think there's more to come to pass there. And again, just that piece about, I suppose, the financial statements themselves becoming probably less a set of just numbers and more, the narrative, the sustainability piece. I think that there's huge change going to probably drive change in audit at some respect, just because momentum is changing. And we will ultimately, when it comes to sustainability, et cetera, there's probably a role there once it gets hammered out in terms of us doing procedures over that kind of, I'll call it non-financial information. So there is change, and there is change afoot.
Yes, you referred there to some of the recent debate around SOX in the UK. I think that came down to cost, did it? I was reading it pretty bluntly yesterday, but
I think so, yeah. And I do know, because I was in the US in 2004 at the start of SOX implementation over there in poor companies, the amount of resource they had to put into it. But if you talk to anyone in the environment, once it gets embedded, once it becomes part of the nuts and bolts, it does lead to, to good outcomes in terms of managing controls and reporting.
Okay. And just to take you up on one other point, which was data analytics, and been hearing an awful lot about it for quite some time now. Is it yet part and parcel of audit, or is it still a little bit of a cherry on top?
It is difficult, Kevin, because we have to do our audit within the auditing standards. So it is, in terms of being able to rely exclusively, it is good for reporting and communication, but to be able to actually satisfy your audit steps per the auditing standards is difficult, so I think more will have to change there. Yeah.
I'd probably tend to agree on that. There's work in the standards area as well, in fairness, as well as for auditors to try and marry the two together. Okay, thank you. Might move on then to the annual report, having solved the problem of the expectations gap. So maybe, Donal, turning to you. So, we're at a stage now where maybe we might be doing first drafts, or we might be considering that sort of thing. So if you're looking at the annual report, what are the key risks do you see for the audit committee in the sort of annual report as a whole?
So I guess the key issue is we don't want to miss anything. So therefore, we've got to make sure that we are well aligned in terms of what we're doing throughout the year. And I think we've talked about it earlier on. There's 3 teams involved. I think we've got to we need a very good timetable in terms of when we're looking at things. So for instance, last year we had changes in auditing standards around going concern. So that was something that we had to deal with early. I think it's really important that we get any changes that are coming through in terms of an annual report have got to be sort of socialized. I think Colin mentioned it earlier in terms of discussions between audit teams, between finance teams, and maybe even impromptu audit committee meetings to really sort of work through some changes, and that might be in September, October. I've done that in the last couple of years, where we get a really good line of sight of what the annual report is going to look like. We look at disclosures, and we have additional meetings to try and make sure that we're addressing those issues. going back to the point around key internal memos, it's really important that organisations themselves look inwardly and make sure that they have the right memos, that they have the right backup, the right support to be able to take positions, that we discuss those at the audit committee, and that the auditor is at those meetings, so that again everything's out on the table. There may well be issues that arise late on, but I think it's all around making sure that we're planning and that the three teams effectively are working together to get the product to a state where, you know, we don't have last minute issues, or that we allow ourselves time to deal with issues that come up at the very end.
If I can maybe just push back slightly on that and maybe challenge just on the area of how early you do communicate with auditors, because, you know, obviously there will be challenging issues and the finance function will be aware of challenging issues and they'll know where there might be a bit of eyeballing across the table. I mean, in your experience, does that happen? Do you sit down with the auditors around now and say, look, we know this is going to be an issue in January, February when you're in?
Absolutely, yeah. I mean, I would say that the board cycles that I'm on, a couple of them are quarterly, some of them are monthly. I would say September, October, November are very busy periods for that type of discussion. Some years you may have some, other years you may not have. But I think all of the, I really encourage and meet with the CFOs and the audit partners on even outside of meetings. I think we talked about that earlier, to try and understand, you know, how are we going to deal with certain issues. So I have one at the moment in one of the institutions around some of the requirements for regulatory definitions in terms of default, etc. So what we've had to do is sit down, go through it, identify what we can do, look at the regulations, and then basically sit down with the auditors and decide how are we going to deal with this. They may not be able to say, here's your answer today, but the work is planned so that when we have our next audit committee meeting in December, we will get an answer in terms of where we feel we are. So again, that's front-loaded work that can and should be done earlier than maybe leaving it to later on in the stage.
Okay, that's great. So again, a theme we're hearing repeatedly is that whole around early communication. And again, I think that responsibility on the organisation to have, you know, an internal timetable that's sort of working out itself, its positions, and having those papers for the audit committee, so that when the auditors arrive, you know, around this time of year, that you can have that sort of mature conversation about the challenges. Yeah,
and I think as well, CFOs will be discussing with audit partners, so, you know, outside of meetings, and there will be positions being developed. They don't have to be through a formal meeting, but obviously the decisions ultimately will be made at a formal meeting. But all of that type of work is essential, I believe, in getting to the right answer in the appropriate time.
Okay, thanks. So Colin, if I could turn to you from the auditor's perspective, and, you know, obviously by the time when the auditors are getting in and doing their work, I mean, now we're looking at the finalisation of the audit report. I mean, what areas do you think, or what advice would you give to audit committees in terms of critical focus as part of that finalisation of the audit report?
Yeah, I think Donald hit the nail on the head there in terms of that last comment, the informal dialogue between some of the management team, the CFO, that goes on, you know, just as night follows day, and positions are aired and comments are aired. That doesn't need to be in that formal arena. That's critical in terms of moving forward. The timetable is the be all and end all. Time is dynamic. Once it's gone, it's gone. You can't get it back. And we're all under pressure. So a clear timetable early in the process helps everybody and gives everybody an easier life. The stakeholders in the process, you know, it's the audit committee, it's the board, it's the internal management, it's the auditors and the audit teams. And they all have to have a mechanism in terms of how comments are fed back to a central point, how that whole administration function is managed, how discussions take place, how positions are ironed out, or, you know, differences of opinion are ironed out. So that whole dialogue is hugely critical. And ever since I kind of started in this profession, somebody said to me, you know, administration is a huge part of the job. And this is one aspect of it that's very important. And let's face it, the annual report is our shop window, or is the shop window. And it's worthwhile spending time on it and making sure that it's presented as well as it possibly can. Another little kind of thing that's starting to develop in the present day, annual reports are becoming more voluminous. They're getting longer, more pages. And this concept of the front of the book and the back of the book is something that is more prevalent. So energy that's evident at the start of the annual report needs to be evident at the back of the annual report. So, comments in relation to, judgments and certain, estimates or policies and procedures need to follow through in terms of the narrative of footnotes to detailed notes in the financial statements. That's important, and something that, with the best will in the world, fatigue kicks in, particularly when you're dealing with, numerous drafts, that it's important that the energy stays consistent right throughout. Emer touched on the point there of, additional responsibilities coming to the fore, additional narrative information being required. There's an onus on us as auditors to have additional SME resource with capability to, consider various excerpts that go into the annual report. But likewise, the audit committee need to have people on their side who are proficient in understanding what that information is saying and saying to the external audience, the stakeholders, and anybody who uses the financial statements. And then I suppose a final point would be, clear disclosure on things like, risks, judgments, post-balance sheet events, all these kind of material items that people look for in financial statements. Again, we could talk for a long time in relation to annual reports.
Yeah. You mentioned SME there. That's the specialist people who are involved that Emer referred to earlier on. Just to try briefly on the front end versus back end, I mean, what we are also seeing, I suppose, is increasing auditor responsibility for other parts of the annual report and increasing regulatory oversight and regulatory requirements in respect of other elements of the annual report. And that's everything from sort of alternative performance measures that could be in there, but definitely as we start moving into sustainability reporting, which we'll talk about shortly, all of that really means that what used to be called the glossy end now really needs to sort of hit the nail, and the auditors will be checking that.
Yeah, and we need to be, able to consider all that information, understand it, comprehend it, and ultimately, aspects of it will form part of our opinions.
Okay, that's great. Thanks, Colin. Well, that leads us nicely into our third question on Slido, which hopefully we'll be able to call up there, which was asking for people's knowledge of the Corporate Sustainability Reporting Directive. And people are getting more honest as they get more relaxed in the morning, which is good. Not enough, I think, is probably true of all of us, including, I suspect, some people in the Commission. These things are moving very, very quickly, but obviously we hope to hear a little bit more from one of our later speakers. Learning about it. And I think that's the key at the moment. It's not a fixed thing, but I think we can definitely get a sense of the direction of where CSRD is going. And there are, if I can use the phrase, some red lines that appear to be in the proposals that I don't think are going to be changed. Will be on top of the agenda in the near future. Probably needs to be on top of the agenda probably now rather than in the near future if you look at some of the deadlines. And looking forward to learning more. Expensive, well, we'll see. I think it could be expensive either way, whether you do or you don't. So, it's just, you need to sort of gird yourself. It's a little bit like the socks reference that Emer made. This is going to become business as usual. So we'd better all get used to it. But they're interesting. So thanks for everybody for your input into that. So CSRD is one of I suppose a number of far-reaching changes that we're going to see over the next year or two. There's also ESEF, which is finally going to sort of appear and be required, and we've heard a little bit about that already. But maybe, Emer, if I can ask you at a high level, what are the sort of changes that you see coming down the track, and how they'll impact, do you think, on the work of the audit committees?
Sure, Kevin, and I actually think that that Slido it's great to see the honesty, because I think everybody, including us here on the panel, feel we don't know enough about it yet, or there's been an element of we kind of know it's coming, but it's kind of comfortable to kick that can down the road. But I think the time for kicking the can is certainly closing in on us. Certainly we've seen a huge uptake in momentum in terms of clients, companies engaging with us in the whole area of sustainability reporting. I guess there are, as you mentioned, Kevin, there are a few key drivers. Everything for us is driven by the EU legislation. I know for the CSRD, the technical standards, I think, are due to be released in May 2022 with an effective date of 23. So that's quite challenging. And I think we kind of know a lot already, or some of us know a lot already. So I think the message, stop procrastinating about it and get on. It's not going to change fundamentally, I think, when it actually is set in stone and comes into place. So what does it mean for entities? And a bit like we talked about the SOX, I think it's seismic for entities in terms of time, commitment, cost, understanding. It is like setting up a kind of new part of your finance function to deal with non-financial reporting. So that's mission critical, and those finance teams, some companies have started to do it already. Some are just at the kind of early stages. So for entities, it's a big deal. For audit committees, it's similar to that. There's going to be an explicit call out when the standards actually do get issued, that there is an onus and an obligation on the audit committees to be responsible for this non-financial information. So that's a change. There's the bit about future of where we're going. That's huge. And then for the auditors, yet to be absolutely finalised who's going to do it, but there more than likely will be an assurance element. And as Colin mentioned there, our opinion will inevitably broaden to cover the glossy front end of the book now, as well as the back for these particular things. So I think huge amount of change, and it's coming at us very, very quickly. And certainly for us in KPMG, we've set up a sustainable futures practice to help us to deal with this, and to help obviously clients in terms of the whole green agenda, etc. So I would say we do not have all the answers. But certainly there's enough people to know, and the biggest message to leave it with is start talking and start getting ready. Okay.
I might just ask you then about another element that's coming in very quickly, which is the single electronic format. And do you think clients are prepared for that? Do you think companies are ready to do that reporting at this point?
Yes, some have been doing it even in terms of, say, like tax returns, etc. So there has been an element, or if you're a US filer, you've been tagging financial statements. So I probably think, Kevin, that's less seismic as the other, the broader sustainability. But again, it's like everything, we tend to like to defer until the very end, and it is coming. So it is another absolute area that people need to focus on.
Okay, and I suppose just one point, if I can add, on corporate sustainability, which is its scope. At the moment, it's going to apply to all large companies. So that's perhaps a bigger scope than people might automatically be tuning into. There's a lot of entities there that aren't under sort of formal regulatory scope at the moment. They're going to find themselves within scope for this, and that'll be a challenge for everybody, regulators included, I would presume, at some way down the line. Thanks for that. That was great. Might just then have a look at the questions that have come in on Slido. So just a question there. Actually, it's a good question. The first one there for audit committee chairs. What are your thoughts on auditor and internal audit engagement? So we've talked about the finance function and audit committees and audit chairs. Is this an area that could enhance audit quality? Maybe Donald, to get your view, you talked a bit about
I'm a big fan of internal audit and the role that they play. And on the institutions I'm involved with, we've got 2 internal audits and then 1 outsourced internal audit, which is another topic. But I really do believe that internal audit is a very, very important part of any organisation, and I think that their ability to bring messages around the organisation and the internal controls and how they're operating, etc. I alluded to a little bit earlier. That information can all be shared with the auditor, and I think hopefully down the road with proposals and so on, that we may see more not quite reliance by auditors on internal audit work, but certainly more engagement between auditors and internal auditors around what work is being done, and maybe key focus areas and so on. So for me, I think it's a really, really critical area, and hopefully as we move and some of these proposals in the UK come into force, that somebody might actually address this one. But I believe that it could be very useful for there to be further communications and more deep communications between auditors and internal auditors.
Yeah, absolutely. The next question, the trend seems to be about increasing responsibilities for members of audit committees and directors. And I suppose, Mary, if I could throw that one over to you, what are your views? Is it is it attractive to become a member of an audit committee?
Well, I think it certainly bears thinking about, and I think people who might be in the frame to do it are being much more careful, not necessarily by doing it, but where they get involved with. So I think non-executive directors, for example, take more consideration about where they become non-executive directors and the controls and the supports and so on within a company. And I mean, there is definitely that trend. I mean, you've seen this with, particularly in the financial services sector. We're going to have SEER coming in, and I think that will focus minds. I mean, coming back to the point about forward-looking statements and so on, I mean, that's where I think we have to be very careful. Producing financial reporting and auditing are very challenging tasks. They're difficult enough as it is. People do take a great deal of responsibility in doing it. And I think we need to be really careful not to add something which is not feasible in terms of predicting the future. I think we need to be really careful how we do that we don't load on something which really, we've talked about the expectation gap. We've got that gap. If you put in another responsibility, I don't think it makes the gap any narrower. Yeah. I think do try to get right what we're doing rather than expanding the brief would be my sense, albeit that, clearly there are some areas where people feel they need more information. Okay. Yeah, it's definitely a challenge, and albeit we'd like it to stop, I can't see the responsibility stopping anytime soon. There's a question there that I might direct to Emer, which is around the UK Big Four splitting audit practice. And you've talked about, I suppose, already what you've seen. And maybe just to confirm, from an Irish point of view, do you think that's something, regardless of whether regulation requires it, do you think that's something that, for example, may happen in Ireland because it's happening in the UK, if it goes ahead there or not?
No, well, certainly I think my view is fairly clear in terms of I wouldn't see it as a positive thing, and that's purely from the audit perspective, in terms of having that resource within the firm that we can go to. You end up getting, I'm fundamentally convinced of this, a better quality result. So it does nothing to enhance audit quality. And the client, the company, the audit committee, I also firmly believe gets a better result. And again, back to the point that we were talking about, kind of, that audit, changes in the Bryden report. I do think Ireland will see ourselves more following EU rather than hitching our wagon to the UK. So that's where I think the direction of travel will go. Okay.
And Kevin, just to add, yes. I would agree wholeheartedly with Emer in terms of that disconnect and losing the subject matter expert resource that we currently have under the roof, particularly in complex engagements, quants analysis, actuarial support, and then with all these new obligations that are coming down the tracks. If they're divorced, I would question whether we'd be able to get the same level of quality.
Okay, that's great. Thanks. And maybe just one last question before we wrap up. So, what practical steps can audit committees take to get up to speed on the new sustainability disclosure requirements that are coming in? So, I might get one view from a committee member and one view from an auditor. So maybe, Donal, if I can turn to you, what practical steps do you think? Yeah,
so I think what we're doing now is we're trying to get some advice in terms of actually understanding what are the requirements, when are they coming in, what entities will it relate to, and I think one of the key issues, and I don't think we've mentioned it, is the data requirements that may actually be required for all of this, because it's hard enough putting together sets of financial statements with all of the data requirements, but now we're going to have significantly more data requirements. So how are we going to make sure that the data is good data? Where is it going to come from? And so on. So I think that's going to be a big issue going forward in terms of what systems are people going to use, etc., to be able to put in the information in the report. So that would be not quite a worry, but that's a challenge, I think.
Okay, and maybe Colin, if I could turn to you then for what auditors can do to help audit committees get up to speed on this, or what are they doing perhaps?
Well, I think it's to get an understanding of what the standards are looking for and what the standards will say, and they're still, evolving somewhat. So it'll be important to understand what is actually required, and then, firms are gearing up with suitable resource who can provide assistance in terms of gathering that information. But again, we also need to be careful of the independence and all the criteria that follow.
Yeah, absolutely. Okay, well, that was excellent. I want to thank my panel members. If I could leave us with a couple of takeaways that I've taken from this, I think one is early communications, and early means before even the auditors get in. I mean, the internal audit, the audit, or the finance function and the audit committee, even if it's just the audit committee chair, need to start talking early so that everybody is well prepared. And if there are going to be issues for debate, you air them early before things get very busy. That importance of three-way or perhaps even four-way communication, if we include the internal audit function, so the finance function, the audit committee, and the audit team, they need to be talking openly and honestly and as early as possible to get all those issues out there. I suppose communication is going to change. Communication within the financial reports are going to change. And there's also a responsibility on audit committees and audit firms to improve their quality of communication. We're moving away from numbers now. There'll always be there, but there's a lot of areas such as sustainability and corporate sustainability reporting, non-financial information more generally. And I suppose the final point then is keep looking to the future. Change is only going to keep coming. It's a challenge, but I think there are the skills and capacities within finance functions, within audit teams and within audit committees to be able to meet those challenges. So I'd like to thank the panel. I'd like to thank Emer and Donal and Mary and Colin. We're back on time now, so we're going to take a break for 15 minutes, and then my colleagues Barry and Kieran will be back to give an update from the Audit Quality Unit and to talk about audit committee outreach.